Good morning, traders. Today is the 11th of October. My name is Neville Hornsey, market analyst for YouTrading, and today I'm joined by
Joel Frank, also market analyst for YouTrading.
How are you doing, Joel?
Yeah, I'm good, mate. I'm good. I mean, we were just saying before, sounds like we both had nice weekends. I spent a lot of time in IKEA, which was good.
Yeah.
And what were you saying? You had a bit of time.
Retail spending. That's what that was. We're just like
yeah, literally. We're boosting those retail numbers before Christmas.
Exactly. And yeah, I bought enough Haribo to give a supply shock to other countries. So yeah.
Well, we'll wait for the Haribo earnings release then, shall we?
Exactly. It'd be good. All right. So last week was interesting, as we were just saying, like NFP. What was your take on the NFP headline figure to start with? What do you think about that one?
Well, I mean, the first thing I should say is, like, I don't know if you remember back to the August NFP that we had just over a month ago, but this September NFP almost felt very similar. So back in August, we had a big miss on the headline NFP number, but the unemployment and the wage growth data was much more bullish. Yep. And we pretty much had the exact same thing in September. So the headline was 194,000 jobs added to the economy in September. That was, I mean, the expectations were something like for close to 500,000. So that was a big miss. 500,000, yeah. So that's a big miss on that. And then we did see, initially, we saw a bit of a dovish reaction. But like I was saying in August, we also had the same in September where the unemployment rate dropped more than expected. I think it was to 4.8% from, where is that? Yeah, 4.8% from 5.1, much more than expected, that drop. And then the average hourly earnings growth was also faster than expected on a month-on-month basis. So it's very much like deja vu. And do you remember after August, we saw the dollar move higher and yields move higher? Yeah. So I was thinking after the September FOMC, we're probably going to see the same reaction. And it kind of looks like things are heading that way. Like the yields are definitely higher. The dollar it's picked up against the yen, like dollar yen is pushing higher, but it hasn't really extended against, like euro dollar's still kind of flat. So we're going to have to wait to see if this move higher in the dollar can happen in like euro dollar. Yeah. But it's looking like it could be pointing that way.
Well, yeah, I think with the revision higher for the previous month, that was obviously really bullish and helped with the unemployment.
That is true.
Okay, so I pulled up the euro dollar futures, as in like the offshore dollars, September 2022. Yeah. And Friday's candle was a big red one, outside day, and it broke structure from the previous swing low, which was 28th of September. So this is a daily chart. And then today you can see it's dropping. So the euro dollar is kind of like the big sort of big money managers and things, that's what they're interested in. So the 10-year in orange goes opposite currently to the euro dollar. So like you said, yields are going higher. And then if I just turn off the yields of the benchmark and put the dollar is also going inverse to the euro dollar, offshore dollar. So Dixie's going up, US 10-year, which is what we normally look at, is going up. And I think a lot of it is to do with this euro dollar futures curve. I think interest rates, because this is like the actual product, and then the yields of this are the interest rates. So the yields are going higher, and that's across the curve now. So I think you were right, and I think the market structure now confirms what you were thinking. So I agree, and so does the market.
That's really interesting. I need to look at. Yeah, I need to look at the euro dollars more often. I think that's really
it's just indicator. It's just like I think a really big market. So it's kind of, if those contracts are being pushed one way, then that's a lot of money managers pushing it. So it's not like just a bit of Forex and a bit of this, it's some big money.
It's a good indicator as to what the market is sort of thinking in a way, isn't it? How sentiment's changing. That's very interesting. I mean, I think the crux of it is like there's a chance that we're going to continue to see weak headline NFP numbers in the coming month, but it's not it's got nothing to do with weak demand for labor in the US. It's all supply side problems, like people not wanting to come back to the labor force, basically for whatever reason. Could be they're retiring early, could be because they're still worried about the pandemic, could be because, childcare, increased childcare responsibilities with schools closed and stuff. It's a supply problem. And when you have a supply problem, as we know, because we're seeing it in energy markets, you see the price of labor going up, which is why we're seeing wage growth accelerate. And obviously, we're also seeing the unemployment rate drop because there's less people wanting to participate in the labor market. So all of it's pointing towards higher wages, which is inflationary, which is just adding to the inflation risks. And that's the primary reason why it's driving yields higher, and inflation expectations on the rise in the US as well. And all of it's towards an eventually more hawkish Fed, which is obviously why it ends up helping the dollar in the end.
Okay.
That's my take.
That's no, exactly. I'm not going to disagree because you're currently right. So I'm not a contrarian all the time. Sometimes I am a contrarian when, like we look at the sort of sentiment indicator on the active trader platform, if I spot 86% of people wanting to be long euro pound, then that's a red flag to me. But your sort of take on Jolt's job openings. Obviously, we're getting close to 11 million.
Yes.
Expectations are for a slight increase, on the openings. So that's tomorrow, Tuesday. I guess that figure has been quoted quite a lot. What else do you want to talk about this week? It's kind of a busy week post. Well, we've got a quiet day today in America because of the St. Columbus Day. And then what are you looking forward to? Stock
markets are open in the US, but bond markets closed today. So like you say, quiet open to the week. Tomorrow, we've got this German ZEW data, but that's not going to move markets really, because focus is more on the US. Like you say, we've got Jolts. Jolts is important at the moment. There's more job openings in the US than there are people looking for jobs.
Yep.
And that should just confirm that. We've got Clarida speaking. I mean, we've got quite a lot of Fed speak this week. Clarida on Tuesday, Brainard on Wednesday, Barkin Thursday, Williams Friday. So we've got a bit of Fed speak to keep an eye on. But really, it's about the FOMC minutes on Wednesday. Also, US CPI. CPI is always interesting. And retail sales on Friday, that's always interesting as well. And preliminary University of Michigan consumer sentiment survey on Friday as well. So quite a lot to be thinking about in the US, really.
Yeah, no, definitely. Going back to tomorrow, like you said, like ZEW for maybe the Euro USD wakes up, because I guess if there is a good or bad number out of Germany, then they haven't had very good data recently, have they? So I just think the euro side of things is kind of quite bearish. And if you've just already explained why you think dollar is bullish, I just think that euro dollar could tank tomorrow if there's a bad number.
Yeah, it's true. I mean, like you say, in the last couple of months, like economic sentiment in the Eurozone's been pretty good. Because most sectors of the economy there have been performing better than expected, and PMI data was like holding up and people revising their GDP forecast higher for the Eurozone. But we're seeing evidence, particularly from manufacturing in Germany. Like you say, we've had weak industrial production, industrial sales data recently out of Germany. So it's like we could get further evidence here that, okay, things in the Eurozone aren't all rosy, because actually manufacturing is really struggling. Obviously, it's all to do with like the supply side disruptions.
Yeah, exactly. But I just think Germany is kind of like a bellwether, isn't it? So we might get ZEW economic sentiment, okay, but if the German one, I just think it's just like a compounding effect, like the German bad data. Like I think it's just going to get to a point now where people just go, this bellwether sort of country of the whole of Europe is not doing so well. Later on that day, like I said, FOMC members speaking after the Jolts job openings. Any backlash, do you think, on the trading from the FOMC? Do you think that's a problem, or is that just a news story?
Well, I mean, first of all, it's not a good look, is it, when you've basically got FOMC members trading on, I mean, I guess that their trades get vetted by whatever committee that oversees all that kind of stuff at the Fed. But still, when it comes down to it, they're trading off of like inside information, aren't they? Because they haven't made those decisions public yet, but they're doing their trades before they make the decision public. So it's not a good look. We've already seen 2 Fed members resign over this. Clarida is arguably the most important guy at the Fed. I mean, okay, Powell is the chairman, but Powell's not an economist. Clarida is the vice chairman, and he's an economist. He's, like, a lot of people think of him as the brains of the Fed. So if he goes, it's, I mean, who knows what's going to happen? You've got who's the next most important 2 are the New York Fed chair, Williams, and
Brainard?
Lael Brainard.
Yeah.
Brainard's very popular in the Democratic Party because she's a big Democrat, basically. She's quite left-leaning.
So
she's very partisan. So
in terms of composition to start with for the FOMC, maybe we just released 2 hawks and we could maybe get 2 doves. So that could change policy slightly. And then... Yeah,
I mean, I think Clarida is sort of neutral and Brainard is definitely more dovish. So if her power is increased by a Clarida resignation, then maybe you could see a more dovish FOMC.
Yeah, that'd be crazy, wouldn't it? You know, considering like the economic side of things is going towards more hawkish, like all the signals are like,
I know.
And then like suddenly the whole sort of composition of the actual committee just sort of changes to people that would rather be dovish.
Yeah.
All right, that's something to watch out for. And then CPI, obviously everyone's like saying 5% inflation is just not sustainable for the 50% of people that are living on or at minimum wage. You know, the people can't afford to
I know,
do this. So a rise of 0.3% would be bad. Absolutely not for everybody. We kind of need to see a negative number, really, don't we? But it's not going to happen, is it?
I mean, we do. Well, the thing is, it's very volatile at the moment, inflation, because you got things like used car prices, which shot up after the stimulus check out. Then they came down in the last couple of months, but now apparently used car prices are rising again. So it's a bit like the headline might be misleading with this kind of data. You kind of need to dig into you need to dig deeper. So I think one of the things you need to look at is you want to look for signs that long-term inflation is bubbling up or going down. So that's things like rental prices, because if they start to rise, they're not as volatile as the other components like energy and car prices. If energy is rising and higher, well, then that's a good sign that inflation is going to be more sustained. That's all I'd say about that. Okay. Markets could be a bit sort of twitchy on it though.
Well, Brent is kind of, I made a measured move of the previous corrective move. And now the measured move has basically had like 50% of that move done. So, you know, we could be at $90 in the next, I don't know, 10 days.
Nev, you know what? That
just like it's not going to take long at this rate.
Nev, zoom out of that chart and go all the way back to 2014, because there's a key level of resistance around about 91. Yeah. Can you zoom out that far?
No, I can't.
You have to go all the way back to 2014.
No, I've got 2016 on this chart.
There is. Yeah, okay. No, that's fine. But it's worth noting, just for anybody that's wants to check on another chart maybe, if you go all the way back to 2014, there's like a couple of lows, perhaps between about 2012 and 2014, and those lows are about 91. Yeah, do it on this.
Right,
I hope I'm right now, I've said that.
All right, so let's just get a box.
Well, there's
all right, so we're kind of here on the futures. So you're looking for 2014. So it'll be up there somewhere.
Yeah, actually, there's a few more resistance to get past before that. But yeah, that's the one I was talking about.
I don't know, because like when you see a breakdown of structure, so you had like, you know, corrective move and then a big breakdown, you know, if I just move that one to here. So like, there's like a little pause there of balance. And that was obviously the high here, and we've gone through that, which means the next sort of balance area is up here, which was those lows from 2014, like you say, January 2014. Yeah. and that is above $90 on the futures. So there's no structure as such here. You know, they just collapsed through that area. So that's a good spot. Yeah. I haven't looked at that far back. I was just concentrated on the speed of the recent rise. Like, look at these weeks. You know, when we were talking about like $70 back in, like the summer, you know, we've had like 1, 2, 3, 4, 5. This is the 6th green week, you know, assuming that we close green. It's just going parabolic, but it has done, you know, previously like November, you know, that was like a pretty parabolic move as well. So,
that was insane.
A year ago. So yeah. It's it won't take long if at this rate. Yeah. Do you want to pull up the Nat Gas chart as well? The UK Nat Gas or something. It just doesn't look real.
I know.
Have I still got it on here? No. No, it's just like a Bitcoin chart now.
Yeah. Is that the US Nat Gas?
Pass. What do I just press? You know, if I just go to it's.
That's you. Yeah, that's the US. I mean, this is still pretty mad, isn't it?
Yeah. So like,
it's even more extreme if you look at the European futures.
I don't know if we got it on here.
Yeah, no, it's all right. It gets the point across.
Yeah. No, they haven't got. What's that? It's got a funny name. The one from Holland or somewhere like that. No, I haven't got it. But yeah.
I don't know.
The sort of structure is kind of very, very similar.
Yeah.
It's just pointing upwards.
I mean, that is just insane, isn't it? Yeah. It's just how sustainable is this move higher though? That's the thing. Because if Russia does make good on its profits. Yeah,
that's what I thought. I thought there's that pipeline coming on stream. Was it Nord Stream? That sounds like it's going to help.
Nord Stream 2, yeah.
Yeah, so I think Putin's played a blinder in terms of because the Germans and everybody was like kind of adamant that wasn't going to happen that easily, but now obviously there's a real need. So yeah,
I mean, if you're strategically from the Russian perspective or from Putin's perspective, like you say, he's played an absolute blinder because you've had all this opposition from the US primarily, but also from the UK and other European countries, all this opposition to the Nord Stream 2 pipeline, which is a natural gas pipeline.
Yeah.
And then Russia has just sat back, not because Gazprom did fulfill all of its contracts, but they didn't rush to give Europe more gas when the prices started spiking in the last couple of months. And they've just let this all hell break loose, basically. And it's funny, I saw this meme the other day on Twitter about what the UK Energy Secretary said about Nord Stream 2 a month ago and what he said last week. And it was like just night and day, like, oh, we're against the Nord Stream pipeline. And then what he said last week was, oh, I never said I opposed it at all.
Yeah, exactly.
So
when politicians want to keep their jobs, then stuff gets done. And obviously, you can't have Europe. It's just, all of the technologies that require electricity, with them running on power stations that are supplied by like gas, like we talked about last week, we're going to need this gas. So bring it on. Okay. So Australian unemployment on Thursday, Aussie dollars, just in a real mess of a pattern at the moment. I don't know what to say about the Australian dollar itself, but what do you think about the actual economics?
Just from an economic standpoint, the data's should be pretty bad because obviously Australia's been in these very strict lockdowns, hasn't really come out of them yet. The Australian economy in Q3 will see a contraction. It's just a question of how bad is the data, how deep is the contraction, how many people get laid off, all that kind of stuff. In terms of how the Aussie's going to respond, you could see a bit of volatility, but I think the Aussie's been a pretty bad performer over the last couple of weeks over the last couple of months anyway. But ever since that break below that balance area that you got marked up in red, it's been struggling. I I can't really see any reason for a sustained rebound in the Aussie. I mean, its saving grace recently has been the rise in energy prices, but that, yeah. You can't rely on that for a sustained rally.
No, I just think it's just best left alone at the moment. There's no sort of, because when you see a green candle, but then you look at all the data, just thinking, how is this? Yeah, it's just like, maybe unless you're going to fade the rallies, but it's not a great ploy. Okay, so USD PPI.
It's not.
Prices are probably going higher. Core retail sales and retail sales on Friday. I mean, the expectations are slightly worse. Yeah, well, they are worse, but the expectations. Should we be expecting worse data out of retail sales in the US?
It's difficult to say. Some of the survey data has been holding up better than expected, but then some of the consumer sentiment indicators that we've already had for September have been a bit worse. That's going to be an interesting data point, definitely.
You would have thought
obviously retail sales is a big component.
But with like higher wages, you would have thought people have more money in their back pocket and then feel more confident, especially if there's like 11 million jobs to be had. If you should lose your job, you can always go and get another one. But you would have thought there'd be some sort of bullish sentiment. But obviously, if the market's expecting a decline, that means that people are more sort of scared about spending the money that they are earning. So
true. And there are X factors. Like, do you remember at the start of September, we were talking about how we were discussing what might the economic impact be of the phasing out of those enhanced unemployment benefits.
Yeah.
So maybe you see a bit of weakness crop up because of that. It's going to be interesting.
Okay. And then the University of Michigan inflation expectations, that has been a bit, and the sentiment, consumer sentiment, that has actually been a little bit market moving in terms of there's been a pause waiting for that data to come. And then once that data's arrived, then the market might move after 3 p.m. So, if you do see a good or bad retail sales an hour and a half earlier, it might get undone come 3 p.m. So that's the way it seems to be.
It could, yeah. Obviously, inflation is such a big theme for markets at the moment, especially how is the recent surge in gas prices going to affect inflation expectations? According to that survey, we don't know yet. It might boost them even more.
Yeah, I think inflation's definitely looking higher if they can't get a handle on this energy, because it was all the way like up until recently. Every time that they talked about inflation, like a central bank would talk about inflation, it would say, down to supply shocks and disruptions and high energy. So we've still got all of that.
Yeah.
And more. All right.
We do. And it's getting worse.
Yeah, it's getting worse. All right. So, check out that euro dollar in terms of like, the futures contract. And then, I'll have a great week. I look forward to speaking to you next week.
You as well, mate.
All right.
Yeah.
Take care.
See ya. Have a good one.